officers, you know what's great about doing jumbo loans? The loan amounts, right? Fantastic. You know what stinks about doing jumbo loans? The guidelines.
Fannie, Freddie.
Make your life easy.
Oaktree.
Just go to Oaktree Funding, man. You can do their quick quote really easily. Click this banner you see right here over on your right, or it's just down below, or the link's around here somewhere on a social media site. Jumbo loans made easy. Take the stress out of those products. Oaktree Funding, get her done.
To say thank you to Eustis Mortgage for having me out at their Nashville event. What a great time that was. I hope we can do it again. Now on with the show. A federal banking regulator does not have the authority to grant national charters to financial technology companies, a federal judge ruled last Monday. Guys, you have to understand, this is great news. And we'll take any good news wherever we can get it when it comes to these financial technology companies. Now, here's what's happening.
FinTech firms have grown their footprint in lending and payments over the past few years. We've all seen it. Did you know that they did this without a federal charter? They have collected state licenses and joined with banks to connect to the mainstream financial system, and now a federal judge says this is not okay.
See, because what it allows these financial technology companies to do, it allows them to operate without capital requirements. So if their business model were to face some adversity, like a whole bunch of their loans were to default and they didn't have the money to cover those defaults, then Jane and Joe taxpayer are on the hook for those.
That's no good.
And honestly, anything that's not good for financial technology companies is good for the population as a whole, because these guys are running fast and they're running loose with the regulations that all other mortgage lenders in the country have to follow. Now, consider this quote, okay, from the Wall Street Journal.
Monday's court decision stops OCC's attempt to usurp state authority by establishing a federal FinTech regulatory framework at the expense of consumers.
Did you get that? If a federal judge didn't intervene, the OCC, along with these FinTech companies, would be able to go forward at the expense of the consumer.
Okay, as I briefly mentioned yesterday, let's get into some more detail. The state of California is going to open its own CFPB.
Awesome.
One that's going to rival the New York Department of Financial Services. That's just fabulous. Well, you know why? It's the state of California, Brian, you know, they got to get money somewhere.
Oh, God.
This is all set up just to extort money out of businesses.
Of course.
That's exactly why this is coming down.
Yep.
So anyway, did you know why no lender in the country wants to lend to New York and why a whole bunch don't?
It's because of the New York Department of Financial Services, you know, what the state of California wants to replicate or outdo.
I mean, check this out. Did you know that when you close a loan in New York, I mean, they don't have a close date? Well, they do. But if the buyer or seller wants to extend it for 30 days for any reason whatsoever, they can do it. So it's like, oh, we're closing on February 28th. Oh, well, I now say March 28th because, you know, my husband can't pack his garage fast enough. Sorry, all cascading escrows that now can't close. And sorry that rates went up as well. This is what California is trying to do.
And in the scenario that Frank just laid out in New York, did you know if you're one of those cascading deals and now you have to extend for 30 days and your rate goes up, did you know there's not a damn thing you can do about it? That's consumer protection according to the state of New York, and that's going to be consumer protection according to the state of California. Frank, honestly, think of our laws last year. Think of San Francisco, where Gavin Newsom was a mayor. You can now relieve yourself wherever you want. You can pimp yourself. You can buy drugs anywhere. And that's the law of the land. We don't make any sense. So here's the whole deal here. For California lenders, this one's going to be a pain in the butt. You're going to have, as a consumer, fewer lenders, definitely, and more expensive transactions and rates to add to the already ridiculous California real estate market.
I know, I saw that in the news, and I was just like, oh, God. It's not, see, they're going to say it's under the guise of protecting the consumer. It's not.
It's going to come at the expense of the consumer.
Right, and it's what it is to, we'll find ways to get money out of businesses. Let's do that. Because they're just so, you know, California's so screwed up and desperate for money, they're just going to try fining and fining and fining and fining just to raise revenue.
Wasn't it Ronald Reagan who said, the 7 most scary words you can hear is, I'm from the government and I'm here to help.
Yeah,
or something to that
something
effect.
like that.
That's what we're doing.
Anyway, there you go. Let us know your thoughts on today's show. Leave us your comments down below. You can use the Facebook share button right there. Start a conversation by sharing it. And subscribe for free in your upper right-hand corner if you're meeting us for the first time. We'll catch you later here at the National Real Estate Post.
Bye.